What's going on, everybody? Good evening. What up, Al Brooks? Yeah, Dell paid, dude. Dell was crazy though. Honestly, I sold all the short-term options, but ended up holding the shares because, as we all should be, I only trade based on the daily closes. In hindsight, probably should have trimmed a couple of the shares over there at 149, but at the end of the day, still got the gain that I didn't expect out of the option. So can't really complain. But yeah, Dell definitely went on a heater today. As I mentioned in my tab, though, this is exactly why we trim. If you were just in this one parked, just holding and hoping, as we were coming into this 149, you better be selling some of those options. So that was a really sick one. I was stoked on Dell. I unfortunately didn't hit MU, though. I was kind of hesitating on it in the morning. Didn't really want to rush into this action. But really, honestly, I should have hit it right here, if I'm being honest with myself. Right after we broke over that pivot, retested it. There's not really much of a reason to not be long there, but I kind of just stopped caring, unfortunately. But that's okay. Got a little distracted with shop and I think I ended up losing like 5% on this one. So I tried to take the breakout and it didn't go my way, but not really too concerned about that one. So anyway, overall, yeah, really nice day on Dell. MU, yeah, unfortunately missed the majority of the entire move today, but anyway, can't complain too much. I'll be evaluating what's good into the end of the week. Even Apple was a decent one into today. Amazon's still kind of holding up right at this 200, so kind of sitting tight there. Oh, we got Flips in here. Welcome in, Flips. Long time no talk, buddy.
What's good, my dude? How are you?
I'm good, dude. Happy 3rd of July, brother.
Thank you, bro. We're in the backyard, the kids running around and drinking a glass of wine.
Oh, that sounds nice. I'm definitely gonna have to get some kind of liquor flowing tonight. Welcome in, Rudy. Welcome in, Christian. Good to see you. Oh, you hit MU, but you scared yourself out of it. Sold for break even. That's yeah. I mean, I can't really say anything because I personally didn't even hit it myself, so I can't tell you that you're wrong for selling for the break even. In hindsight, yeah, definitely, obviously should have hit it. I sometimes get in the mindset that I see a chart behaving in a way that I don't like, so I think I know what's going to happen. But really, that's just another thing for me to continue to remind myself is every time I see a name break what I'm looking for and start acting nice above the level that I care about, it's time for me to start acting on that. But I don't know. I just didn't like this kind of big move higher and lower at the beginning of the day. That 15-minute didn't look beautiful. So I was like, you know what? I'm just going to kind of sit this one out. But anyway, not the end of the world. Not the end of the world. My doubt stopped me from getting in SMH. What doubt? I don't remember talking about SMH. Maybe NVIDIA, but yeah, I don't remember talking about SMH. Either way, I'm sorry. Posted that MU last. Oh, my doubt. Oh, I know. I mean, it stopped me from getting an MU too. Stopped me from getting an MU too. So yeah, that one's on me for sure. But what can we do, my friend? It was a short day, so not really the end of the world. I know, I know. We'll hit the next one for sure. It's all good. Dell, hopefully you're in Dell and that one kind of did more than we could have ever expected. So that was a crazy one. All right. I'm gonna send out one more message letting everybody know we're getting started. And we'll get right into it. I don't know if you'll want to add anything tonight, but I'm gonna clickbait your name and let everybody know that Flips is in here as well, just cause.
I put it on my tab too for you,
Oh, really? Okay. Everybody loves Flips and lectures.
bro. That XPX small port is not small anymore.
I didn't even know you were trading in SPX small port, to be honest. I haven't been in VC. I ain't gonna lie to you, I haven't been in VC at all. Like past 2 months, I've been working a lot and I was traveling, and now I'm finally back and just getting back to posting in my tab. So I gotta catch up with you in VC.
Yeah, we started on Monday a $100 port for
Nah,
XPX.
hundred
Uh,
dollars.
$100. So you divide it the last 12 to 15 minutes of the day, and we look
Nah,
for some nice orders. And we played it Monday, Tuesday, Wednesday, and $100 port is sitting right now like at 2,300
nah, bro.
in
Wow,
three days, baby, 3 days. The
bro,
goal is
that's
$100 to $10,000. That's the goal.
oh my God, bro. That's crazy. I had no idea you were doing that. I see the post in your tab, port 125 to 685. Damn, bro. That's crazy. Just three. So is that what's that? Three SPX trades only?
Yeah, three trades so far. We used $100, 120 on me. On Monday, we used 200 on Tuesday, and we used 250 today. And
Bro, you should
we continue adding more until if we lose, then we start back to $100 and we work our way again.
bro, you should do like a weekly challenge with that. Just $100 challenge. Everybody that does it just commits to losing the whole $100.
Yeah,
Lose it
that's
all
the
or make something.
and every time you make over $500, you pay yourself $100. The goal is to pay yourself 10,000.
Damn, bro. That's so cool you're doing that. Good shit, dude. Shout out to you. I guess I gotta hop in the SPX challenge, bro. I gotta run it with you.
Friday.
Friday? Okay. All right, I guess I'll pull up Friday then. All right. Well, we're a couple minutes after the hour, so we'll get this one going. Understood that you guys are probably all getting ready for the fourth, so hopefully we won't keep this one too long, but should be hopefully one of the more informative lectures that we've had in a while, at least one of the ones that I provided. I want to start out by letting you all know a lot of you guys have seen this graphic that I presented before. And tonight, I really want to dive in a little bit deeper into what exactly all this means and how to really kind of understand it and start structuring trades off of this. What's it called? Off of this. What am I trying to say here? Off of this graphic. And this is created by a really good trader that I've not really follow, but have kind of done some learning from, bought his book. His name's Oliver Kell. So just as a note at the beginning of this lecture, I'm not claiming the rights to anything in this image, anything in the strategy. It's really all from this guy, Oliver Kell. So shout out to him. I bought his book. I think it's a pretty good book. It's a little bit expensive, $50 for a pretty small book, but I like the book. I think it was worth it, and I like the way he trades. I think it's pretty similar to the way I like to trade. So ended up kind of learning a lot from it, and it was really similar to the way I trade, and definitely switch the 20 and 10 EMA. Yeah, this graphic's actually correct. I don't know what happened with the other one, but so anyway, going to really talk about this, and that's kind of why this lecture was really titled "The Cycle of Price Action," because we're really going to talk through all of it. So just kind of starting out. The big idea behind what we're looking at here is every single stock is always kind of either in three different states: an uptrend, a downtrend, or a kind of neutral, flat trend, base, range, whatever you want to call it. And at the end of the day, it's our job to figure out where a stock is in its given trend so that we can structure trades based off of that. So very simply put, for example, if a stock is in an uptrend, there's a good chance you're going to want to structure trades in a direction that puts you in a position to make money when the price moves higher. And same thing goes when a stock is in a downtrend, you're likely going to want to structure trades that make you money when the stock moves lower. Because as we should be familiar with by now, anytime a stock is trending in a given direction, either up or down, the probability is generally higher that we make money on trades in that direction. Now, with anything in the market, there's always caveats, different situations where that's not going to be true. So don't necessarily take that for 100% truth all the time. However, important thing to note there. And the final thing that I didn't note is that there is ranges, right? And everybody's familiar with a range or a base when a stock is really going nowhere. And those bases are essentially when either the trend is changing or the trend is continuing. So when a stock tops, turns into a downtrend, eventually it'll follow these steps here. So we'll see kind of some kind of wedge drop, EMA crossback where the 10 EMA flips below the 20, and then some continuation patterns until ultimately that downtrend extends itself a little bit too far. We start to see some kind of more positive price action, and then the cycle repeats to the upside. And obviously, before I get any further, this drawing is very, very clearly an oversimplification of price action, right? In no way, shape, or form is this meant to be, a direct analog to how a stock actually moves For me, the reason I really like this is it puts a name and a system to a lot of the things that people like us in here trade every single day. Like I guarantee Flips is trading these sorts of patterns every day. He doesn't call it this, which is fine. I just think this is a really nice way of actually presenting the information in a lot of the ways that we structure our trades. And yeah, I guess I owe it to Spike to shout out this book really quick. Again, not a paid advertisement in any way. I don't know this person. I literally just like the book. Let me figure out the book really quick. I got to look it up. I don't remember what it's called. All over book. I think it's like, yeah, here we go. So this is the book that really I'm kind of gauging all the information from here. Again, I can't mention this enough. This is not a paid sponsorship. I don't get any money if you guys buy the book. I don't care if you buy the book. We're teaching what's in the book right now. So do what you want, but got to give credit to this guy where it's due. A lot of the content in this lecture and a lot of my strategy is actually based off of this guy's principles. So shout out to this guy. Maybe one day I'll get to talk to him. Addition to that, just as another note, a lot of the other kind of things that I trade are volume price analysis, which is based pretty heavily off of another trader called Anna Cooling, I think is how to say her name, which is another great book that I read recently, probably going on a year ago now, which is the volume price analysis book. Another great book. Again, we've had some lectures kind of teaching the concepts in it, but this one's a bit cheaper. It's only $20. You know, it's really, really cheap. So anyway, yeah, two books that really have guided and helped me refine my trading strategy a little bit. And it just goes to show, right? There's always ways that even I can improve, even flips can improve, right? We're never perfect, never 100% the best. So got to make sure we're staying agile, continuing to learn. So anyway, that was a long-winded explanation for me saying that I read books and teach you guys some of the things that I learned from them in my own way. All right. So coming back to this graphic, oops, I know what I'm doing here. Coming back to this graphic again, this really simply, yeah, here, I'll just send a link to these books in the chat. So that's that one. And that's that one. There's those books. And yeah, the first book is $50 and the other one is 19. But I think definitely really good books that I enjoyed a lot. All right, so back to this graphic again. This is a very oversimplified kind of example of really the cycle of price action is what it's titled. And let's just break down a little bit of what's on the graphic before we get too much further into it. So we got two EMAs, the 10 EMA and the 20 EMA, 10 in red, 20 in blue, which somebody called Cornbread noticed that they were opposite in the last graphic that I showed, which I don't know how that happened, but 10 EMA in red, 20 EMA in blue or purple. And then there's a couple different names for different places in the trend. So the purpose of this lecture today is really put some examples to these names and give everybody a frame of reference for really a lot of you guys probably trade this way. If you trade like flips, a lot of you guys probably trade similar to this in some ways at different points in the trend. So a lot of what we talk about might actually sound reasonably familiar. So I want to start out by covering kind of each step in the cycle here. And give kind of a good explanation into exactly what each step really means. So I want to start out by covering this first phase here, which is EMA crossback. And I just want to start this out by taking a look at the charts here. And the example that I wanted to cover was on SHOP. So essentially the short kind of definition for an EMA crossback is when the 10 EMA first turns positive back over the 20 EMA. So generally speaking, it's the very early phases of a new uptrend is when we get that EMA crossback. So for example, SHOP here certainly was in a longer term downtrend, setting lower highs, lower lows. And just over the last couple months, we got this EMA crossback when this cloud indicator here turns green. So this cloud, the way I have it set up, represents the 10 and 20 EMAs. So when it's red, the 10 is below the 20. When it's green, the 10 is above the 20, representing a positive trend. So essentially, that EMA crossback is really the first retest of the moving averages following a breakout from a base. And this breakout has a name, but we'll focus on not calling it anything for now. So this EMA crossback is really this first time when these EMAs become positive and we come back down to test these EMAs. And generally speaking, this is really typically a nice buy point because these EMAs provide a great reference for a short-term area of value. And the first time these EMAs cross back is a reasonably early buy point when early buyers can start to get in as anticipation builds. We're starting to get that new uptrend developing. That first touch of the EMAs, generally speaking, is a reasonable place to start a position. Now, especially on this specific example for shop, it is even better considering we've got this little area of support from this earnings gap down that we had reclaimed right around the same spot. So a couple reasons to like a buy in this specific area if you weren't already in. And really, this is as a note, right? These sorts of patterns are things that we see time and time again. This isn't something that was just reflected on the daily time frame. It's something that we see on the 5 minute, on the 15, on the hourly, on the 4 hour. This goes for every single time frame. And really, what we want to see in this EMA crossback is we want to see some support begin to form. So we don't necessarily need to take that first trade right at the EMAs, right when we first hit that 10 EMA. However, once we see this kind of lower tail begin to form, we have some kind of positive price action here, right? And this kind of ties in with the volume price analysis side of things. We break above the EMAs and we get this nice kind of climactic buy day on above average volume, which is denoted by this yellow volume bar. Then we pull back into the EMAs on declining sell volume, right? So notice as price moves lower, the amount of sellers also drops off, which is generally a positive volume price analysis pattern, right? We're not seeing more sellers enter the marketplace as price moves lower. We're seeing sellers begin to step away, right? So this is a nice positive signal for us to see in terms of buyers stepping in. Right, and even if we zoom in on the hourly just to see things a bit more clearly, you can kind of see what this looks like here. So this kind of first move down to this area of support, again, it's not exactly right on the money, but you can kind of see what that starts to look like on the hourly. Right here, you can see these kind of big sell bars forming at the beginning of the day. All of a sudden, as we come near this area of support, which coincides with the 10 and 20 EMAs, we start to get these kind of downside wicks beginning to form, which haven't been something that we had seen in prior action. And additionally, we're starting to see these kind of minor higher lows begin to form as well around the same area. All right, so a couple of different ways to trade it. And then even, right, we could call this an EMA crossback on the lower time frames as well. When we start to get this move above the EMAs turn positive with potentially an ideal short-term buy point right there. Again, getting a little bit into the nitty-gritty there, but that's really the big idea of the EMA crossback. So we want to see that kind of structured, controlled move back into the EMAs in order to take a position there. And I'm sure if we look at something else intraday, I think, let me think of a good example here. Let's think, maybe Dell from a couple days ago is probably pretty decent. Kind of a decent example. So this is the 15-minute time frame, right? Again, similar idea where we have that negative trend, that first break above the EMAs into that 10 and 20 EMA cloud, generally speaking, ends up being a buy point. And even today, when we got that big pop over the EMAs and retest back into it, we still found buyers at these EMAs. So generally speaking, this is a really reasonably high probability area to find buyers. Those 10 and 20 EMAs, always significant. All right, let me go back to shop here. So again, right, the EMA crossback, going back to this example, is generally speaking a favorable place to buy, considering you're reasonably early in the trend here, right? This is the first time that the trend is kind of officially turning positive with a 10 EMA above the 20. So generally speaking, you're in kind of early here. So not a bad place to be taking a buyer with a reasonably low risk, or high reward. And when you're taking that EMA crossback trade, usually it's pretty easy to define a stop either on a daily close below the EMAs or on maybe this daily bars low here for this specific example. And also when you're trading with this kind of structure, me personally, it gives me a really nice framework as a swing trader because I know so long as these EMAs are trending positively and price is holding above these EMAs in terms of daily closes, I don't really have a reason to be worried. Like, for example, a couple days ago on shop, we got this big move below the EMAs, but I'm paying attention to daily closes. So I don't really care what happens until the day closes. And lo and behold, once the day closes, we're still in a positive trend. Price is still holding the EMAs. So there's not really any reason for me to care. Like, I'm just going to keep holding, especially considering I'm in shares. So I don't really need to care, right? I'm not really stressed about what's going on in the 5 minute. It doesn't really matter to me. And it's kind of the same idea with Dell, right? Although we had a pretty nasty reversal today on high volume, I'm not gonna stress too much yet, right? Our entry still has a little bit of a cushion, so I'm not gonna freak out yet. The trend is still positive. The chart still looks decent, so I'm not gonna freak out. There's no really point to start panicking yet. I don't love the rejection of this upper trend. I don't love this kind of move on high volume today, but I'm not gonna freak out. One thing to remember with any chart is that we don't know what's going to happen. And so long as the trade is still behaving according to our plan, there's no point in really us stressing. Yeah, shop definitely could be a double top. Yeah, I'm not in the game of predicting, so we'll kind of wait and see. But yeah, definitely could be a bit of a double top, at least on the hourly, right? Kind of moved into that 68 and pulled off that level today. So yeah, could certainly be a double top, but not going to worry about it. I'm in shares, so not really going to freak out. Is there a script for that? Yeah, so this script, this Bollinger Band script, or excuse me, Bollinger Band, this EMA band script is pinned in my tab. So let me see if I can go pull that up for you. So in my tab, if you go in here, and then I think if you go into pins, yeah, so you could just go into pins up top here, click on this, and then go to the studies from lecture tonight, and you should be able to find it pretty easily. So you got the EMA cloud and also this high volume study as well. So you could get those yellow high volume indications, which I have here, which is generally just used for me to highlight above average volume. And Flips, I want to ask you a question. I know I probably put a lot of labels on things that you don't necessarily always label, but this, I'm assuming, pretty closely reflects, and also based on what I know, reflects part of your trade strategy where you're kind of taking those pullback buys at the EMAs. You know, you'll enter at the bottom, and then this is kind of your re-entry strategy, right? Is that correct?
Yeah, that's 100% correct. I look first for my resistance to be broken on higher volume. Then I always wait for the retest. If the retest doesn't come, I do not enter the trade. Because then you're always buying somebody's trim. And when
Right.
you're buying somebody's trim, you're hoping, you're not trading, you're hoping that it continues running or it continues dropping. So you always gotta wait for the pullback for the support on higher volume. And if that's the
Agreed.
EMA or if that's a level, then that's where you take it.
Yep, exactly. And yeah, those EMAs and levels always can be a high probability price to get in those trades, and really with, generally speaking, lower risk and higher reward, right? Because your stop is pretty clearly defined. It could be right below the EMAs or right below your level. So it's, generally speaking, a pretty simple simple trade.
Correct. Yeah. If you're buying it on the EMA touch, if you want to get on calls and you're buying it on an EMA touch or on a level touch, then your stop loss is literally 10 to 15 cents, depending what stock you're playing. Let's say you're playing Apple or you're playing Qs. If you're playing Nvidia or you're playing Tesla, then you got to give yourself a little bit more room, or Meta. You got to give yourself a little bit more of a room for a bigger stop.
Sure.
But yeah, that's exactly the same way to do it. You never buy. People usually see a candle running up, and then you want to get in on calls. By the time that you get in, I'm already at 15% calls because I'm buying when there's no IV on my on the support because it's coming down.
Right. Very nice. I'm trying to find a good example, but the next kind of piece in the trend after that first EMA crossback, right? So when the trend first flips to positive, the kind of pattern in this example is called a basin break, which very simply put, this is just any really consolidation pattern. So this could look like a lot of different things. It's effectively the same type of move as an EMA crossback. It's really just a cross, or excuse me, a consolidation into positively trending EMAs. So for example, this right here could be one example of that, right? This consolidation into positively trending EMAs. This could be a basin break, right? Positively trending EMAs and consolidation right into it. Generally speaking, right, those EMAs are where we'd see those kind of short-term moves find support, especially considering that the strongest stocks in the market are always going to be the ones you want to be paying attention to for the most part. And those names are always going to be having buyers take part in the stock once we start to see those moves into the EMAs, right? Because generally speaking, those EMAs are regarded as high quality buy points. So when we get that consolidation type of action into those EMAs, it's pretty common to see a move higher. And again, Apple, a great example of
Yeah.
this, right? So
If
we
you
didn't really
want to
get,
look at also, if you want to look at Tesla on the 5 minute after you look at Apple, if you like,
yeah,
uh,
let's
it
do
it,
it.
it it gives you a good example. I think it's like the after the second 5 minute candle. If you pull
Okay.
up Tesla on the five,
Here, I'll pull it up right now. We'll do that first, and we'll go to Apple because somebody's asking about Tesla. Which, by the way, Flips, Tesla is disgusting, bro.
yeah, that was
Disgusting.
stupid.
Disgusting.
So pull up today on the five, and let's see,
Here, I'll put pre-market on. I know you like pre-market.
of course, 100%.
All right, what
All
you
right.
got? You said second bar of the day.
Yeah. So if you see, there's two green candles on the opening range, and then there's a little flag always touching support. If you see that support, so you wait for the pullback to touch support and to touch EMAs.
Right. And I think one thing about this kind of cycle of price action graphic and some of the examples we give, they're not necessarily always going to be the same, right? But the concepts and the ideas are the same. So, for example, this right here is your first EMA crossback, right? Remember, we have the 10 EMA back above the 20 EMA, that green cloud. Price consolidates right to that EMA. And lo and behold, the first test of that 10 EMA is bought, right? So you don't necessarily need to enter at the bottom. Flips always enters at the bottom. But if you want to be maybe a little bit more cautious and pay the premium for waiting, you could wait for this 5-minute bar that touches the EMAs to close. You see that positive reaction off the EMAs. And as a result, there's definitely no reason to be short here, right? So you
Yep.
probably got to be long. And even then, if you want to be even more cautious, you could just wait for pre-market high to break. Once you get the
Correct.
close above pre-market high, you could long it, right? So you got the pattern you wanted. EMA crossback. I mean, this is exactly what's happening here, right? I mean, think about this. 10 EMA crosses above the 20 EMA. We get that green cloud, a consolidation right into the EMAs. You could buy it when you tag the EMAs the first time. You could buy it when the 5-minute bar closes. You could buy it after this consolidation when we break above a key level.
Above pre-market high, it retests pre-market high, then you can take it again.
Right. So in terms of Johnny's question, he asked, how can we enter a trade that's already moving using price action? It kept moving higher and higher, and you ended up missing the whole move on Tesla today. Yeah, I mean, it's a great question, right? I think first and foremost, Tesla, this is, and also one thing to note, it's so easy for me to say, oh yeah, you should have bought here in hindsight, right? Anybody can look at any chart and tell you where you should buy and where you should sell. So this isn't me telling you, oh, this is all the places you could have done right. These are just examples for you to study in the future, right? Because these patterns repeat. There's a reason this graphic exists, right? It's not like this is something that only has happened one time in the world. This is happening every day on every time frame on hundreds and thousands of equities. And all you need is to be able to identify these patterns with a system, which is not that difficult, in my opinion. It's really just about pattern recognition and being able to execute those trades in order to actually make this work. So first and foremost, this is going to be that first EMA crossback, right? 10 and 20 EMAs turn positive. You get that nice consolidation into the EMAs. Honestly, after that, there was no good entry, right? Unless you're a scalper and you're trading above the prior bar's high, which most people aren't doing that. That's totally an Al Brooks thing. There's not really much of an entry, right? You could take that chase above pre-market high if you wanted to, but
Yeah,
there's
that's the
really
only
not
other entry.
that's the
really
only
the
other
only
entry. Yeah, in my opinion, there's two entries here, right? This flag into the EMAs and break above pre-market high.
Right.
That's it. There's no other entries in that blue box.
The other,
right?
there's always, they say, whenever when something bounces or rejects somewhere, most likely it will do it again. If you
Right.
guys, if there's anybody here that traded VC with me today, we got in after the push of pre-market high. There's a red candle in between all the 5-minute candles. Do you see that one, Toasty? The inside go up, 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 up.
This one here?
Past pre-market high. Remember the retest of pre-market high?
Yeah. Oh, wait, what are you talking about? In pre-market?
Yeah, you okay? You got the two.
This
you
one
got
here?
the two breakouts. Yeah, you got the two breakouts, right?
Yeah.
You got the flag breakout and then the retest of pre-market high, correct?
Right. I see what you're saying.
Okay.
Like
so
here.
then if after pre-market high, no. After pre-market high, there's two 5-minute candles.
Yes, these two.
No, Baba, in the chart during the day, there's two green candles. One,
Yeah,
that's
here?
one. That's one, and then one more up.
Right here.
That's one, and then one more up.
Here.
That's two.
Oh,
then you see the red candle. You see the red candle?
I see it.
Okay, that red candle, whenever it bounced from, that's usually a level 2. Correct. So then you draw a line there too. Yep. So that's where I bought the second time, because if it bounced once from there, most likely it will bounce twice, and that's what we bought Tesla again.
Right. So that's that retest right here.
Correct.
That
was the second time that we entered. That's for the person that said, if something is running, when do I enter? You wait for the support rejection of it. So that was the support retest. Then you draw a line, on the inside red candle, and if the next candle retests it, that can be another entry.
Got it. Yeah, that makes
Yeah,
sense. Sorry, I was confused what you were saying there for a little bit. Yeah, so it definitely, I will say, Flips definitely a harder entry to catch. It's definitely
oh,
a
yep,
trade that somebody a little bit more advanced is going to take. In terms of the simpler trades, I'd say first off, EMA crossback, then the breakover pre-market high, and that's in
correct.
this box alone, right? But if we're using the cycle of price action to keep looking for trades, right, that's that first EMA crossback. Then we can start looking for some kind of base, right? Which me, I see two of these downtrends right here forming, or even three forming into the EMAs, right, all day, right? So we have this forming into the EMAs with support at pre-market high. So this one for me is actually a little bit harder, honestly. Like I could have seen somebody trying to get long right here. Like when we break below the EMAs and reclaim it, honestly, I could see somebody trying to take this long right here and getting stopped out. That would have been a bummer, but I can see this trade being one that's maybe a loser, right? Where you get that move back into the EMAs, you get that bounce back up after that fake out lower. I could see somebody taking this trade. I think that's a reasonable idea, which ultimately would have stopped out, right? Especially if your stop was at these prior lows, you would have got stopped out. So that I could consider maybe would be a losing trade that would be reasonable per this system. The next kind of reasonable trade would be this reclaim of the EMAs after we break this trend, right? So pretty clearly, obviously established trend here. EMA is still positive, right? Which is something to note. So if you're a day trader and stopping out when the EMAs are still positive, you're probably trading weeklies, right? Which, that's okay. But, if you have a little bit more time, you don't need to stop out when you get kind of this small breakdown when the trend is still completely valid, right? So I usually try to put myself in a position where if I am trying to take an entry like this, I won't have to stop out because, well, I won't have to stop out if the trend still stays positive, right? So something to be kind of mindful there. But a couple other decent entries, right? You got this trend here, which not too much to really do there, right? That was just a massive move into the end of the day. And then this is obviously after the market closed, after 10 a.m. So at this point, this is all after hours. So not really anything to do there. But a couple decent trades on Tesla. Honestly, though, you really had to take it at the beginning of the day. These two trades, a little bit harder to find. But at the beginning of the day, definitely was the best time for Tesla. And also today was a weird day, right? It's market's closing at 10. You got 4th of July tomorrow. So things are going to be a little bit funkier today. Yeah, would you average your position and add more here? Probably not, right? Yeah, especially on a day like today. Yeah, probably not. Wise investor, is there an advantage to use a 10 and 20 EMAs versus 9 and 50? Yeah, Flips, I'm pretty sure you use 9, 21, and 50 or 9, 20, and 50. Is that correct?
Yeah, 9, 21, and 50. View up, TTM squeeze, and volume.
Yeah. So what I use is the 10 and 20 EMAs, which the 10 and 20 EMAs are pretty much the same thing as the 9 and 21 EMAs. There's almost no difference, right? They're pretty much the same thing. The only thing I use that's different than Flips is I use the 50 SMA, not the 50 EMA, and the 200 SMA, not the EMA. And I know Flips also pulls all of those up as well. But if I'm looking at kind of all my studies here, it looks a little bit more like this, right? So you'll see the 50 SMA here in white, the 200 in gray. And that's not something that I usually am trading with on the lower time frames. It's generally something I'm using on the higher time frames. So this 50 SMA, for example, I think it's on Dell was a good one recently, acting as support, right? So no reason to cut a trade when it's holding the 50 SMA as support. So yeah. Is there any use for the whole moving average? Supposedly it removes some lag. Yeah, the whole moving average, I believe, is supposed to have some kind of computation to be a little bit leading or something like that. I looked into it a long time ago because I was curious about the same thing. I don't remember the differences with the whole moving average, but it has its use cases. I believe it's also a bit smoother, and we could even just pull that up and check just because now you got me curious. So pull up the 50. Oh, okay. So it's much more reactive, I guess. I don't remember that being the case. Yeah, so definitely a little bit more reactive. I don't remember why it's plotted this way though, to be honest with you. I really don't. That's not what I thought it was gonna look like, honestly. Yeah, I don't remember why that is the way that is, honestly. We could follow up and have some DMs about that though if you want to talk a little bit more. What's the difference between SMA and EMA? Yeah, good question. SMA, it stands for simple moving average. EMA stands for exponential moving average. So the simple moving average is exactly as it sounds. It's a simple average. So for example, if you're going to take the average of, for example, how much money you bought or made over the last 10 years, you're going to add up the money you made every 10 years. So maybe it's 50,000, 51,000, 52,000, 53,000, and then you're going to divide that by 10, and that's your average income over the last 10 years, right? Simple. Then there's the exponential moving average, which is a bit more complicated, and it gives more weighting to the more recent values. And that computation is one that I'm not going to really explain the math of, but essentially it gives more weight to the more recent values. So if we compare the 50 SMA in white here, and I toss up the 50 EMA, so we pull that up, 50, and we'll make it big and pink, sure, so you can see it. The 50 EMA is going to follow price a bit more closely. So you can kind of see here, for the most part, the 50 EMA is just a little bit closer to price. Like here, I don't exactly know what caused that dip down. I'm not exactly sure why that happened, but for the most part, it's more close to price. And you can see it's kind of lagging price a little bit here because of these lower closes. But again, for the most part, 50 EMA is, or the EMAs are reasonably similar to the SMAs. Me personally, I prefer to use the EMAs with the shorter length moving averages, only because the whole purpose of using EMAs is kind of to have that more reactive moving average for those shorter term moves. And as a result, in my opinion, it's best to use those shorter length exponential moving averages as a direct result of that. However, that's just kind of my philosophy. It doesn't necessarily need to be. You keep getting page not found on your links for EMA. Really? Is it not working? Oh no, must not be up anymore. All right, I'll reshare all those. I'll reshare all those after the class so we have all these again. No worries. Thanks for letting me know. Yeah, so that's the answer there. All right, let's keep rolling here. So base and break again is going to be those kind of consolidation types of moves into the moving averages. And finally, what I want to talk about is this exhaustion extension. And this is kind of one where there's a couple rules behind the exhaustion extension. A couple rules behind it is, generally speaking, when a stock is doing kind of an exhaustion extension, generally speaking, that's going to mark the end of an uptrend. And it usually looks like some kind of high volume, super extended move from the EMAs. And the more extensions you see in a given stock, the higher probability of a reversal. So I think generally the rule is the first extension might not be the reversal, but the second and third ones start to really become a higher probability for a reversal. And this is actually pretty nicely reflected in MU. I mean, here you could argue that we got a reversal. This would be kind of that extension, right? Significant extension from the EMAs. It's time to be a bit more cautious here. And then another significant extension from the EMAs here. Definitely a reason to be more cautious. And obviously this was into earnings, so you can only say so much about this. But that's kind of the big idea there. I think MU maybe did something a little similar. Yeah, so first extension here, right? Exhaustion extension, far move away from the EMAs. We got that little pullback, but still continue the trend higher. We're here on MU, another massive extension and move back into the EMAs. But again, we're starting to get that constructive base. So it seems like we're not kind of topped out just yet, but if we get another significant extension on MU, it would be pretty probable to think that we are starting to see the highs be put in. Now, again, the exhaustion extension can be a little bit subjective. Me personally, I like to really look for these on the weekly time frame. So one that I called out to Norvin recently that, obviously still kind of in the works is Costco. So we kind of have two extensions in the works right here. We have one extension from the moving averages and another one here. And Norvin was asking me, if I like Costco here. Obviously, it's not in a bear trend, right? There's no reason to be short. However, me personally, a little bit difficult to be long here just based on the cycle of price action, right? This is the second extension off of the moving averages. So for me personally, this is not a high probability area to get long. Now, can it work and can price move higher? Yeah, absolutely, right? And already has moved higher relative to the beginning of the week. I mean, we got to move lower about 10 points. Now we have a move higher about 10 points. So effectively, kind of neutral on the week so far. So when you get these exhaustion extensions, they can be a bit subjective. So important to kind of note that. Another really kind of important extension is going to be on Tesla, right? if we look on this move lower, this is absolutely an extension to the downside, right? So we get kind of one exhaustion extension here, almost another here, right? Big move lower on the EMAs, and a third one, right? And this is the most massive one, also coupled with very, very high volume. Generally speaking, that's going to be a big turning point in the trend when we get an extension such as that. And obviously, this did end up being the bottom in Tesla, and now we are more than $100 higher than this extension to the downside. So these extensions, both higher and lower, are ones not to be afraid of. Obviously, you don't want to be trying to fish for the bottom. However, definitely things to be looking out for in terms of a larger trend reversal, right? These are usually pretty good clues in terms of looking out for a longer term reversal. Implied volatility asks how to plot these crossover cloud and TOS. Yeah, just a custom study that I thought I had posted in my tab, but apparently the link isn't working. So anyway, yes, the book does talk about extensions, iPhone. All right. Everybody clear on kind of this uptrend cycle. So the EMA crossback, the basin break, and the exhaustion extension. One thing I'll note is that all this stuff is going to take more practice, right? I could tell you this and all tonight, and it may go in one ear and out the other. So with anything that we talk about in these classes, ultimately it takes practice, right? So you got to be studying the charts. You got to be looking for these types of moves, identifying them, taking notes, annotating your charts, studying what you're learning, and really making sure you're actually practicing with these concepts, right? It's one thing for us to just tell you about them all, and then you go and try and trade them. Is Gunnar still in NVIDIA? That's so funny that everybody knows about that. Yeah, he probably is. He's working on it. That guy is the king of being a beautiful fade. All right, cool. That is the big idea on the uptrend cycle of price action. Let's start talking a little bit about this section. And one thing to note is kind of this first wedge drop section. So after we get that first exhaustion extension, generally speaking, we get some kind of trade into the moving averages as there starts to be kind of, a lot less buyers, right? So we got that exhaustion extension higher, and then all of a sudden buyers kind of disappear. So we start to get that kind of weakening price action into the moving averages. And I think Tesla is a pretty decent example of that here, where you can see not quite an exhaustion extension, but definitely a big move away from the EMAs. And then all of a sudden, we get this kind of drop straight through the moving averages, right? I mean, we cut through them like butter. And when you see that sort of thing, generally speaking, that's a red flag. Usually the EMAs are going to be strong support, especially in an uptrend like this. So when you see price just move directly through all the EMAs, that really starts to confirm the reversal, because clearly buyers are no longer present in the stock, or at least they're present in much less significance. And as a result, right, we want to start being mindful of either exiting longs if you haven't already, or starting to look to the short side if we're interested in that. So this would be kind of that first wedge drop as we come back below the moving averages. You can see we struggle to really reclaim and have any momentum above the moving averages. And also here, from a volume price analysis perspective, we get this anomaly, right? High selling volume here. So yeah, definitely kind of a reason to be looking short. And also this was earnings as well. So, got to give that a little bit of a grain of salt. And then after the wedge drop, we get the opposite of a EMA crossback to the upside, which is an EMA crossback to the downside. So here you can see, again, really high sell volume. Technically the EMA crossback is there, but this is another really good one, right? Consolidation right into the EMAs, and lo and behold, the EMAs end up being the top. We also have a bunch of significant moving averages right here, right? The 200 MA, the 50 MA. So this is just a massive, massive cluster of resistance right here. It's going to take a lot to get through these levels. And when you see us start to reject these EMAs and big SMAs, this is really time to either get out of all your longs or be short or wait for the next long trade to set up. So this is really kind of the cycle of that trend reversal. Then again, we get kind of the similar idea where any pops into the moving averages should be sold. However, again, going back to the cycle of price action, no trend lasts forever, right? And you can see here, after we got that significant move lower, we start to get this trading range begin to form, right? A little bit of a trading range. And then all of a sudden, we didn't get that big reversal extension, right? So for a big kind of extension away from the moving averages, we want to see that significant move away from the EMAs, which we kind of have here with high volume, which that really didn't happen this time around. However, we start to get this consolidation right on top of the moving averages. And and the stock begins to stop falling lower. And ultimately, right, we reclaim the moving averages, get a little bit of an EMA crossback, and form the short-term uptrend, right? So you have to be kind of nimble, right? You can't just get set in one mindset and think, oh, we got all the signs of a downtrend. We're in a downtrend, so that means every consolidation is going to resolve to the downside, right? You have to listen to price. You have to be paying attention to what the price actually is doing, rather than just kind of trading blindly off of what you think should happen. And really, to the downside, it ends up being the exact same idea as the upside. So you're going to see that kind of similar cycle where you have EMA crossbacks and basin breaks into the moving averages, right? You can kind of see that reflected here with a nice base kind of forming here and another base forming here and another base forming here into the moving averages. And then ultimately we get this kind of move lower, right? Again, no big reversal extension, but we start to get this really high volume. We form this small base at the moving averages, EMAs cross back higher here, and then we get this nice uptrend higher, right? Another kind of long-term base, right? Just a big range forming here. And then boom, right? We start to get this little uptrend forming again, right? The shorter term trend, EMAs cross higher, nice move higher, consolidate for a little bit, another downtrend forms, right? We get this wedge drop lower, EMAs cross to the downside, no move into the EMAs, but we lose the 50 SMA and 200 SMA and move lower. And really the cycle just repeats over and over and over again, right? I mean, we could talk about this all day on Tesla alone, as it's been, definitely one of the most significant stocks in terms of massive moves higher or lower over the past few years. But the crazy part is, at the end of the day, Tesla kind of hasn't gone anywhere, right? Tesla is pretty much flat on the year of 2024. So pretty crazy stuff. But at the end of the day, the big idea of kind of understanding the cycle of price action is understanding that price, as we've talked about all night, and volume are the most important thing when paying attention and trying to do technical analysis, right? Price is the number one thing that anybody should be paying attention to. Before any indicator, you should be paying attention to price, right? And secondly, volume essentially shows you exactly what is going on under the hood, right? So it's important to note that volume is essentially what confirms the price action. So without volume, price doesn't really mean much, right? If we get a massive move higher on no volume, doesn't really mean anything, right? So we got this massive move higher on massive volume, so it's very important. So if you remember nothing from this lecture and go home into 4th of July and get all hammered and forget it all, that's fine. But I want you to remember one thing. Volume is the cause, right? Buyers and sellers cause changes in price, and price is the effect, right? So volume comes and changes what happens in price. It's kind of the chicken and the egg story, right? What comes first? Volume is the raw buyers and sellers that affect price. So volume is the cause, price is the effect. That's the big idea. So putting it all together at the end of the day, right? This graphic, although very simple, allows us to really have a system behind understanding where a stock is in a given trend. And me personally, I found it really, really useful to use the system in ways to structure my trades recently. So for example, on Shop, right? A couple trades recently that some of you have taken with me. Shop, for example, if we take a look at the weekly here, came in to, came down for this higher low, right? Higher low right here. And one thing that is notable about this one is technically it moved below all the key moving averages. So this one, in terms of a buying perspective, based on what we've talked about today, is actually a bit of a higher risk one. However, you draw this uptrend and it should all make sense, right? You got this nice uptrend right where price stalled out. So for me personally, it was a great place to take that risk and place a buy order on some shares, right? Shares, reasonably low risk, not taking options even. So me personally, right, I took those contracts, right, or shares, excuse me, all the way somewhere in here, right around 58. Didn't end up buying the full bottom, but bought around 58 and continue to hold as price remained solid, right? I was paying attention to price. We weren't setting any new lows, no daily closes below these lows, so no reason for me to sell. I continued holding, right, as we started moving through the EMAs, right? No reason for me to sell. I moved my stop up into profits as I'm managing the trade. Then we get this EMA crossback again, right? This is all positive movement, right? I'm letting the trade work for me. I'm letting the price action develop, right? In hindsight, 68 was my first profit target. I probably should have sold some shares here. I didn't, right? I missed this movement on this day, didn't end up selling, whatever, right? Not the end of the world. We moved a dollar below, so even could have sold today if I wanted to. Short answer though is that again, right? I'm not going to sell just because I missed the 68 and we started pulling back, right? The EMAs are still in a positive trend. I'm going to continue to hold this as long as the EMAs are trending positively and we're holding this daily support, right? There's not really any reason for me to sell, right? This is a move looking bullish, right? Price is moving higher. And it's the same story with Dell, right? It's the exact reason I took that position 2 days ago on the option side, right? Same idea with Dell. Price is sitting, consolidating right at the EMAs, right? The trend is very clearly up, right? We've got multiple moves higher. Buyers are very clearly present in the stock. Even this first dip back down to the 50 EMA was bought. We got this big move higher after that consolidation, indicating buyers still present in the stock. We get a higher low right back down to this support level right at 139, a little bit of consolidation around here. And then as price breaks back above this 141 area, that's where I took some more options or some more calls, right? Right on that break of 141, these prior daily highs. Let's see if I can show you that a little bit more cleanly. Hourly is probably best. Right here, very clearly, sellers present right at the 142 area, excuse me. So once we get that break above, you should probably start to think about getting long, right? Hourly close above that 142, got long right around here, swung into the next day, got a little bit moved lower, but not really any reason to freak out about it. And then ultimately today, as some of you noticed, nice move into the 149 area. So that's really putting it all together. Yeah, any questions, comments on that? How's everybody feeling? Everybody ready for the end of the week? All right, cool. So yeah, that really brings us to the end of today's session. As I mentioned before, obviously this is going to be things that you have to continue to practice. We'll continue to practice these in the tab as well and make sure to kind of reinforce these concepts over the next few weeks. But that's really the big idea. Again, this is definitely a graphic to live by. Print it out, study it, get familiar with it, and start to look for these examples in your own trades. All right, Norman, ARM. Oh yeah, I remember this one. I looked at this a couple days ago. Yeah, this is a great example of exactly what we talked about today, right, Norvin? I mean, what is this to you, right? That first cross back into the EMAs, a little bit of a consolidation, right back into them, right? This is exactly what you should be looking for, right? Market leader as well, holding above this prior key level, 163 area. Yeah, great example, Norvin. I will not forget the links. I will do it right when we end, and hopefully they work. Sometimes they take like a day to actually work, but I'll send them out right after this. Cool. All right. Well, thanks for your time, everybody. Hope you have a great 4th of July. And yeah, Nick, I'll get those links out for you right now. And yeah, see you guys all in the next one. Awesome. Thanks, everybody. Have a good night.